How hard for the first 30k? Super hard. Well, everything is hard. No matter amount, everything is hard if you don't know how to trade. Once you learn how to trade, you won't ever have a small account again. I can't believe Mara and Riot. I wish I still had my shares from like $4 or $3.90 or whatever it was on Riot. And Mara also down here when it broke out the initial from like $2, $2.60 or whatever. Shoulda, coulda, woulda. Who would have known they were gonna go to... Damn. Again, my entries, I mean, oh man, I'm really good at catching the big runners. But I'm not as good as holding them. You remember I said GME will go up when it was 50. Can you explain why? Yes, when you have a momentum stock, like an extreme momentum stock, okay? It made an enormous move. It went up 14,000% in 4 months. Then it went down 95%, almost, or 92% in a month. And then it got tight. It built this tight range here. Now, when you have a stock with extreme volatility, it gets really tight. Usually that tightness is followed by volatility. And that's exactly what happens. If you study hundreds of examples of this, you will understand it. It's the same movie over and over again. Now, did I think it was gonna go to 350 almost? No. If I had known, I wouldn't have sold it in the 260s, 270s yesterday, which wasn't actually too bad. But I had 2 trades on it. First one was when I bought it right out of the range, then I added, and then I flipped short on this day here. And then I rebought it when it broke out of this range. You see, it's the same thing. Tight ranges. Focus on tight ranges. Doesn't matter if it's on the 60-minute, the daily, weekly, tight ranges is what you should be focusing on. So many people focus on these random breakout stocks, setups that are coming off of wide and loose. Wide and loose is for losers. Tight is for winners. Focus on tight setups on volatile stocks. This is why you should focus on high ADR stocks versus low ADR stocks. When you scoot scanner to check for volume, I don't have any. Focus on setups. Focus on stocks that are liquid enough and you won't have to worry about volume. Volume is for losers. It's the setup quality that matters. Only time I look at volume on a specific thing is on episodic pivots. Those are the only volume dependent trades. You want to see like a lot above average volume very early. Breakouts, it doesn't matter. If you have a liquid stock, it's gonna be liquid no matter what. It doesn't matter. And many times on breakouts, the volume comes in after you're supposed to buy it. If you wait for volume confirmation on breakouts, you're doing it wrong. You don't need a scanner for volume. Unless you scan for the nightly scans, because you always want to have some kind of a volume cutoff. Well, the way most people use volume, it's useless. They're hindsight knights. CTRM. It's a good looking, yeah, it's a good looking one. I think preferably the 20-day comes down a little bit, reaches the price, but the 50 and 20 get closer to the price, so it gets a little bit of pinched, and then I think it will be ready for a big move. This one looks really good. Reminds me of these other low-priced high runners. SNDL similar setup, SCOM similar setup. They all look pretty much the same. It's a nice sign. It means speculation money is still there if these things are holding up and flagging. It's a very good sign. JWN was a good setup. Oh yeah, it was a really good setup. Yes, it's long gone now, but that was a hell of a setup. Do I risk more than 1% on A+ setups? Sure, absolutely, sometimes. But it's kind of hard nowadays because my accounts are so big. It's kind of hard to do size on anything. I mean, something like Veil, I didn't have I had like maybe 4% of my accounts in this thing. And look at this candle. This is the candle I created when I stopped out. I had 4% of my accounts in this thing. Like, there's so few stocks can absorb the size I trade. It's very hard. It's called the Big Account Challenge. Everyone, all these day trading rooms that are selling subscriptions, they're doing the small accounts challenge. It's not a challenge. Small accounts are easy. You have no slippage. They're all frauds. But if the momentum is there, if the setups are there, it doesn't matter. That's the thing. Like, the biggest momentum stocks are the shittiest frauds. Every year, if you look at the biggest, like some micro caps or small caps that go up 1,000%, 2,000%, most of them are total pieces of turrets. They're fraud, sketchy management. They're in the business of selling stock, not actually having a product or service. It's the same thing every year. That's what many of these short selling firms don't get. Like, if you're too early on one of these, your nice little fancy short thesis, it's not worth anything because, you know, you're gonna get run over. Timing is everything with these things. Timing is everything. If you get the timing wrong, it's the same thing as being wrong. That's how it is in trading. Your fancy thesis doesn't matter shit. It's all about timing.